mode after rallying, especially in the late hours of yesterday's US session, when euro hit correction from the fresh 9-month low, hit levels at around 133.60 and is getting lower at the moment, similar with the cable. The currencies are basically now back to their initial trend. However, still the corrective action is still underway, especially with euro and sterling, while dollar yen came back into the well-known range after again failing to clear 77 level. The dollar Swiss is regaining strength and heading towards yesterday's high at 92.60 after bottoming at 91.46 late yesterday and regaining 92 The gold is was trading actually on a back foot during the overnight session after hitting recovery high at 16.34 and but dropping down to 16.17 overnight. The crude oil is also recovering from yesterday's fresh lows under previous 75.70 low and hitting levels below 75 dollars per barrel, currently trading around $78 per barrel zone. Full calendar today started already with the German with the Eurozone services PMI that actually contracted in this release to 48.8 versus 49.1 the forecast and the 49.1 the previous month release. Still to come from UK current account, which is forecasted to show further widening of the gap to minus 10.4 billion pounds compared to the previous month at minus 9.4 billion pounds. Services PMI also expected to come in a more poor result. 50.6 is today's forecast versus 51.1 previous month. And the UK's final GDP quarterly expected unchanged at 0.2% from the previous quarter release. Also, the retail sales from UK, from Eurozone, and the final GDP are due later on at 9 a.m. GMT. Retail sales are expected to drop to minus 0.2% compared to the previous month release at 0.3%, while GDP, similar to the UK, remains forecasted unchanged at 0.2%. The main headline today is the actually US ADP non-farm employment, the private employment economic indicator that is due at 12:15 GMT, and this is actually the main indicator for the coming non-farm payrolls that are due this Friday. And the forecast for today is actually lower from the previous release at 91,000. Is forecasted at 76,000 for today. So we have to closely watch the release of today's ADP private sector employment that will actually likely indicate the release of the coming US non-farm payrolls that are due on Friday. Also from today's highlight we have US ISM non-farm manufacturing PMI expected at 53 versus 53.3 previous month release, and today is also the US crude oil inventories. The forecast for today is a build of 1 million barrels versus the previous week's release that showed build of 1.9 million barrels. Also, let's just take a look also on the figures that are coming on Friday, which is the US non-farm payrolls. Actually, this is the key release of this week. And to take a look on the forecast, the unemployment rate in US is expected actually to stay unchanged at 9.1% compared to the previous month release. However, in this calendar, I do not have pardon. The U.S. non-farm payrolls. The forecast is build of 51,000 jobs compared to the unchanged the previous month release. So this should be positive if the figure released at this level or higher. Any negative release would show that there is no improvement in the U.S. economy and it's still struggling to pick up the recovery. However, this was also mentioned yesterday by Fed President Bernanke, who said that most likely the further help from the Federal Reserves will be likely required as the speed of growth is not satisfactory at this point. Let's now take a look on the charts and the technical part of our presentation. As we can see, the euro dollar starting first, the strong down move from the latest leg lower from 136.77, bottomed as a part of the broader downtrend of euro dollar, bottomed yesterday at 131.45. That marks a fresh 8 or 9 months now. Not quite sure. A fresh 9-month low, and the subsequent bounce has so far regained 130 initial. Actually, it's reached the levels just under initial resistance at 133.80, where the gains were capped at 133.68, and the subsequent pullback being contained on the downside by 132.60, which is also hourly 20 days moving average. This is keeping the near-term positive tone in play, and according to the wave principles, this is the current wave C of the broader. We can see it on the daily chart. So we have 1, 2, 3, 4, 5, and then we have wave A, B, and C is currently underway. Based on the length of the wave A, the wave C should extend up to 134.65. Where is also the 68.1 Fibonacci retracement of the down move from 136.77 down to 131.45. So we're talking about level here 34.60, 34.70, where the according to the wave principles, the extension of the wave C should end. However, the 4 days, for the 4 hours, 20 days moving average and 4 hour chart, pardon, is limiting the upside. The studies on the 4 hours still under their midlines, meaning a sort of a negative tone. On the upside, we need to see the break of initial barriers at 133.68, 133.80 in order to resume this kind of barriers. On the upside, we have 134.10 and 134 Fibonacci levels of 50 and 61.8%. Trend line resistance that is at 135.73. So basically, it's a bit far. 135 and 135.15 is to recovery picture. Shows that the pair is still in the firm downtrend, and both studies are basically in overextended zone, signaling that further extension lower would be the likely scenario after ending the current correction that leaves 133.68. The low should be marked at this point the previous one at 133. The assumption of the downtrend occurred at this point, but there is still, from some other studies, as I mentioned, the principals are still seeing scope for a further extension higher. However, a wider picture of euro-dollar shows the bears firmly in play, and the 130 level seen in focus on break of 131.45, which is the fresh 9-month low posted yesterday. The British pound, the bounce from yesterday's low at 153.39, which is just ahead of the key short-term support at 153.26, the low of 22nd of September, has regained the initial barrier at 154.65 and extending gains to the levels at 154.94, just under our round figure at 155. And this also marks the over 38.2% Fibonacci retracement of the down move from 157.14 down to 153.39. This is the latest leg lower. As we can see, the over 38.2%. However, the gains were capped at this point, and the subsequent pullback was initially contained at 154.11 by hourly 20 days moving average. However, it's sort of struggling to sustain gains here, and current attack at below 20 days moving average might weaken the near-term picture. On the upside, we need to see the clearance of initial barrier at 155 to signal the resumption of this near-term recovery and expose the next levels, which are 155.30 and 155.42, ahead of Fibonacci levels at 155.70. which is the 61.8% retracement of 157.40 and 53.39 down leg, and then we have the resistance also at 155.85 high of 3rd of October. This extension above these levels actually might signal the forming of a double bottom here and open way for a fresh recovery of the pair. However, the clearance of 157 zone that initially capped the recovery from 153.26 is required at this point in order to confirm the double bottom and the open way for stronger correction. On the downside,